In this week's episode of the Stock Scores Market Minutes, I'm going to talk about trading support and resistance, how to do it. I will then do my regular weekly market analysis. We'll look for some opportunities with the Stock Scores Market Scan tool, and then look at the trade of the week on CRON. All right, so let's talk about trading support and resistance. Very important concept, often done incorrectly. Support is a low price on a chart. It's the point where price stops going down and starts going up. Resistance is the point at a high where the market stopped going up and started to go down. I call those inflection points. And we can draw a horizontal line across past highs, or we can draw a line across multiple inflection points to give a trend line of support or resistance. Now there's some simple rules. When markets rally into resistance, they usually get stuck at resistance. And by the same token, stocks that fall into support, in other words, go down day after day after day and then hit support, they usually get stuck and bounce off of support. Now that's different than stocks that go sideways at resistance. So if a stock is hitting resistance for multiple times and it's quiet underneath that level of resistance and then it breaks out, that is when it usually goes into an upward trend. And stocks that go sideways at support and then break down usually go into downward trends. Now this all makes a little more sense when we look at charts, so let's show some examples. Here we've got a stock that had resistance right there. It broke out and it went for a move higher, establishing new resistance at the price peak that it hit in October. Stock then pulled back and bounced around. Well, look what happened. When it rallied into that level of resistance, it got stuck. And it took some time. It got quiet again underneath resistance before it made the breakout. And now we'll see if it ultimately goes into a longer term upward trend. Looking at an example of support, you had a stock here that had support right here, okay, the old inflection points, touched it, stalled, and then just this week it broke down through that support and it looks like that stock is destined to go lower. But what's important is when the stock fell into this level of support, it stalled, it bounced. And that's what tends to happen. When prices fall into support, they bounce. When prices rally into resistance, they also get stuck. But ultimately, if you have that low volatility at support or resistance and you get a breakout, you can go into a good trend. All right, let's do our regular weekly market analysis, starting us off with the U.S. markets, which have been pretty strong. I call it a summer rally, a drift higher, as the buyers continue to be stronger than the sellers. And you can see very simply, we've got rising bottoms on the chart. We're in an upward sloping channel, and therefore you should be bullish in the short term until that trend is broken. Looking at the longer term trend on the weekly chart, we had strong resistance here. We rallied into it, got stuck. We rallied into it and stalled for about a week, and now we've made that breakout, and that looks to me like an indication the market still wants to go higher, and therefore I am bullish long term on the US markets as well. Looking at the small cap sector, it is certainly underperforming the large caps, and we have strong resistance right here. We came up into that resistance, got stuck, and now it looks like we're going to try to get up to that resistance level again. Will we stall and then ultimately break out? If so, then we should get a rally back to those highs from last August. Canadian markets. Here's the short-term chart. You can see it is underperforming the US. While the US is moving up nicely, the Canadian market is stuck in this sideways trading range. We do have some optimism building. We can say that because there are rising bottoms on the chart. That is a sign of optimism. We've rallied into this resistance level here. We're stalling. What we want to watch for is, do we break out through that from low volatility? If so, then perhaps the Canadian markets can play catch up. Looking at the longer term chart, you can see that long-term resistance holding up right there. We're basically stalling at it. We're in that sideways range. But I think this market ultimately will continue higher. It just is going to take a little bit of time to get through that resistance level. On the small cap or micro cap Canadian stocks, you can see that we are in a downward sloping channel, and therefore this is a market best avoided. We have support here, and we actually broke down through that just on Friday, and I think that means we're going to head down toward the bottom part of that channel. Big problem on the TSX Venture is the cannabis stocks, which have gone into a bit of a slump, and until that reverses, I would say generally avoid this market. On to currencies, US dollar is still in an upward trend, but it certainly has stalled for the last few months as it reconciles the really considerable gains that it made. I'm still bullish on the US dollar, but it doesn't have a ton of upside until it hits that level of resistance. And so the risk reward of being long the US dollar right now perhaps isn't worth it. Looking at the Canadian dollar, as I talked about in the last few weeks, it finally broke its downward trend line from a rising bottom. If you go back to past episodes of this Market Minutes video, you will see that I noted that breakout as a bullish sign that the Canadian dollar was going to move higher, and it is slowly doing exactly that. And I continue to be bullish on the Canadian dollar after being bearish of it for a very long time. On to interest rates. Here is the bond market. You can see we had a pretty good sell-off week this week. Does that mean that the bull market in bonds is over? I don't think so. We're still in an upward trend. We've essentially just come up to the top of the price channel. We're probably going to pull back to the bottom of the price channel, and then we will see if we bounce. If we don't bounce, if we in fact go sideways there and then break down through that upward trend line, at that point I will get bearish, and that will be an indication that interest rates are likely to rise. But for now, we're still in that bull market for the bond market, and therefore interest rates should remain low until that trend line is broken. On to commodities. Gold had that big breakout a few weeks ago. It's been consolidating nicely, building a little pennant pattern there. That's a bullish sign. It means that we're not getting a lot of selling pressure into the strength that was brought on the last couple of months. And I think I still remain bullish of gold. I still think it needs to build a bit more of a base before it can launch, but it does look relatively bullish. On the price of oil, we are in this pennant pattern. You can see I draw that out like that. And until we break to the upside, I wouldn't get too excited. Until we break to the downside, I wouldn't get too bearish. We're simply going to bounce around in here until we break through one of those trend lines of support or resistance. And finally, the fear chart. This, of course, is the VXX, an indication of nervousness about the future. And you can see it's very low, and therefore fear is not a factor in the market right now. So my ratings then on the US stock market, bullish on both time frames. Canadian market, neutral long-term, bullish short-term. Gold, bullish on both time frames. Oil, neutral long-term, but bullish short-term as it has been ticking higher. Stocks continue to drift higher, but with some whipsaw volatility, which indicates that investors are really having a hard time believing in the rally, a little bit of uncertainty about trade and those sorts of things. And so we get lots of whipsaws up and down. Therefore, buy the dips, sell the rips. In other words, buy weakness and sell strength as the trend generally migrates higher. Gold is building an optimistic pattern and may soon resume the upward trend. Oil trying to stabilize and is looking better, but it has some work to do, and fear is low. All right, so let's do a market scan on stock scores and see if we can uncover any opportunities. This week I'm going to run the action break scan. This is a scan available to investor and active trader members of stock scores, and as of Friday's data, it found 13 stocks that made an abnormal price break out of a downward trend. And you can see here on the first candidate, NLST, we've got very strong volume, we've got price action that is positive. The issue is how high can it go? We've got resistance up here, and that's probably where it's going to get stuck. And so on a risk-reward basis, if we think about our entry being here, support being here, the upside potential to that resistance level is about 1.5 times the risk, which is a little low. I prefer to see at least 2, so I'd give this one a 6 out of 10. It might be better if there is a pullback, and then that will improve the risk-reward profile. All right, next up is SES, and you can see some volume coming into the stock. Price action showing some promise as it breaks out of this trading range. It's pretty good. It's broken the downward trend line, built a nice base, and now starting to come alive, and therefore something to keep an eye on next week. Keep moving along. I'm not going to look at all of these individually. This one, you can again see the abnormal price and volume, relatively light volume. Look at the number of trades is only 248, which indicates that there's not a lot of people interested in this stock, but the price action is positive. I always like to take a look at the 3-year weekly chart if I like the daily, just to see what I'm dealing with in terms of longer term support and resistance. And here I can see that this stock has a lot of volume that traded in around that price, and I think it may come up to $1.40 and then have a little bit of a tough time getting through. So I'd be selective with this one. Keep moving along. NextGen Energy, both listed on the US and Canadian markets, and here you can see the US listing on the Amex. Look at that volume that came in Friday, breaking from rising bottoms with good price action. The negative is fair bit of volume traded back here in those price levels around that $1.70 to $2 level. That's going to be some volume to chew through for the stock. It may make it slow, but I do like this stock as a good longer term trade setup. I think it's got some good potential. Here's the Canadian listing of it, basically the same company, just listed on the Canadian market. UXIN, I like the action here. It had a big pickup in volume on Friday. Price action is good. It's not a real standout, but we are through the downward trend line. I think this can get up to $4 perhaps in the next little while. It's at $2.69 now. Risk reward ratio is probably good, so that's something to keep an eye on. And I'll just do the last ones on this page and then we'll move on. All right, so let's get back to the presentation and talk about the day trade of the week. This is more of an example of the kind of things that I look for, the kind of stocks that I day trade, an educational thing. Obviously, we can't do anything on these now. These were trades from the past week. And this particular stock was a short sell candidate on Friday. It triggered my action candle indicator. You can see the little gray dot there. That's what I use for the short signal. This is something that we found with the active live service on Stock Scores. You can read more about that on the Stock Scores website. It broke down from low volatility with the 2-minute action candle and then went sharply lower. The economics of the trade, if you were willing to take $100 of risk, then the position size was 1,000 shares. That required, using margin, about $5,000 of capital because, of course, when day trading, you can leverage these things 3 to 1. It ended up closing the day at 7.3 times risk. You can see over here that was 7.3 times the risk taken on the trade, and therefore it was a $730 gain on a $5,000 capital requirement for a 14.6 return in just one day. Well, that has been the Stock Scores Market Minutes for July 15th, 2019. Hope you've enjoyed it. If so, click on the like button, leave a comment, tell your friends, and most importantly, trade well.